It's time we took a deep dive into Joby Aviation. This is one of the companies that I'm most excited about in the Asymmetric portfolio. Shares, since I bought them earlier this year, have almost doubled. And the potential for Joby Aviation is much higher than that. I think this is still a company that can 10x from here. But the risk profile is very different than a lot of companies that I own because this is basically a pre-revenue company. We don't know a lot about their business model. We don't know anything about their margins. But I want to go through the plans that they have, the aircraft that they have, why I think they're differentiated from competitors like Archer Aviation, and why I think there's a lot of potential for this business model long term. Fundamentally, these eVTOL aircraft, electric vertical takeoff and landing aircraft, could make travel kind of short distance, point to point, maybe a distance you don't want to take an Uber or a Lyft, but a distance you don't necessarily want to take an aircraft as well. So I'm in the Minneapolis area. Let's say we want to go to Chicago. I think ultimately that's something you could potentially just hop in a Joby aircraft with your family and go to a city like that, just a couple of 100 miles away. We're not there yet, but that's the long-term vision for a company like Joby Aviation. So let's go through everything that you need to know. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And of course, check out my newsletter, Asymmetric Investing. There's a link on the screen and a link in the show notes. Like I said, Joby Aviation is one of the stocks that I've done a spotlight on. I will put that link in the show notes. It also is where I have my asymmetric portfolio that is beating the market by a wide margin. So love to have you as part of that community there. And I do want to thank this video sponsor, Fiscal AI. Fiscal AI is a tool that I use for all of my investing. I'm going to use it throughout this video. But if you like what you see with that product, go to fiscal.ai/ASYM. They'll give you 2 weeks for free and then 15% off after that. When we start looking at Joby Aviation, I think we have to start with the aircraft. That's really the fundamental thing. If they don't get this part right, none of the other stuff really matters. So this is what the aircraft looks like. Travels up to 200 miles per hour, has a range of 100 miles. That's the electric aircraft. There's longer range aircraft that they have already tested with hydrogen power. Remember, a hydrogen aircraft doesn't actually burn hydrogen. It turns hydrogen into electricity. That electricity then runs electric motors. So the powertrain is effectively the same. You're just swapping out some batteries for that hydrogen piece of the powertrain. So that's kind of the way to think about that. That's how you extend the range beyond 100 miles. But for now, it will be 100 miles in range, 0 emissions, and it is quieter than a helicopter during takeoff and landing. They say 100 times quieter. I don't know how you can be multiples quieter, but that's what they say. There's also 1 pilot and 4 passengers. So for now, until they get their autonomous product, that's something again that they are working on. There's going to be 1 person in the plane flying and then up to 4 people who are going to be passengers. I'll talk a little bit about that, what that business model will look like in the future. There are 6 propellers, so there is redundancy there as well. And those propellers go from vertical, which is what you can see here, to more horizontal as it flies horizontally. So it takes off from a helipad, a vertiport is what they're calling those, and then can get up to 200 miles per hour by tilting those propellers. That's the way that it works. Now, they are at the point where they're testing with the FAA. So this is not a product that is out in commercial operations yet, but this is kind of the stages that they're at here. So this is going to be something that's not going to happen until likely 2026, but they've gotten through stage 1, almost through stage 2, which is means of compliance, and then certification plans is complete. Now they're going through this testing phase here. It said above here that they've already flown 600 flights this year. So you can see that right here. This is just like filling a huge checkbox. And that's what they're working on with the FAA right now. They go through a lot of these details on each of their conference calls. And basically, once they get FAA approval, then approval the rest of the world is going to be much, much easier. It's likely they could run commercial operations in the UAE, for example, before they actually get full FAA approval. We'll see how that works out, but that's kind of the way that the testing phase goes. The next thing we need to think about is manufacturing. They're scaling up manufacturing. They have basically test facilities right now. And right now they can make about a dozen aircraft per year. I think they recently doubled that. So 24 aircraft per year, what they potentially could make in 2026. Ultimately, you can see down here in their Dayton facility, they're looking for up to 500 aircraft per year. So to put a little perspective on that, they said a couple of years ago that those aircraft would be $1.3 million. For the sake of this discussion, let's say they're $2 million. That would be about $1 billion per year in revenue just if they were selling that aircraft. Now, we don't know exactly where those numbers are going to play out. Management has not talked a lot about the business model since kind of those early days of them being a public company. But that should give an idea of what the opportunity, what the scale is for that business. This scaling manufacturing is something that they have been working on, and they actually raised capital, sold stock to try to do this a little bit more effectively so that they don't have to do things like take out debt or raise capital by selling stock from a position of desperation. You definitely don't want that in a company like this that's pre-revenue, that can't really sustain itself with its operations yet. You need to have enough capital runway to get to the point where you can actually get to positive free cash flow. And they're quite a ways away from that. So for now, the scale of those operations is going to be relatively small, but over the next few years, look for that to expand. Next up, let's talk about their business model. And this is just an example they have on their website. This could be a short flight from downtown Manhattan to the JFK airport, something that is already serviced by helicopters right now. I'll talk about their recent acquisition of Blade that could bring a bunch of demand from places like New York. But this is the way that it would work. It would basically be an Uber, and Uber is actually one of their potential partners, but it would be point-to-point travel like this, and you would pay for it exactly like you pay for an Uber. So this would be, you know what? Okay, I'm going to take a Joby aircraft from this vertiport, and I'm going to pay, let's say, $100 for that trip. That's the way that the business model could work. Now, there's 3 ways that they have talked about operating their business model. The lowest margin option is going to be just to simply sell their aircraft. So again, let's say that they're able to produce an aircraft for $2 million. They sell it for $3 million. You have $1 million worth of margin, but then that's kind of the end of it. That's not necessarily all that great of a business model long term, although your returns on the capital that you're investing would come the quickest. The second would be where you sell your aircraft to a partner, and then you help them operate an air taxi business in their local markets. This is what they're looking at in places like the UAE, in Japan, where you maybe would sell that aircraft. Maybe you do it at a little bit lower margin. So it's a $2.5 million sale. You recoup all your initial investment, but then you have ongoing revenue from not only servicing those aircraft, but also operating those aircraft as well. That's going to be a little bit better long-term margin, long-term profitability than just selling aircraft to begin with, but not the best return on investment. What management has said that the best return on that investment is going to be to operate those aircraft. So that's what they're likely looking to do, especially in the US, where Joby would actually build the aircraft and own them themselves, or at least finance them themselves. Then each of these rides that they're doing, let's say, for example, a $100 flight from Manhattan to the JFK airport, they're going to get all of that revenue. So a couple of things you have to do there. You have to have the supply and you have to have the demand. On the demand side, this is where a recent acquisition of Blade's business, Blade is essentially this air taxi business, but they were just simply operating helicopters. They didn't own the helicopters. There was third parties that owned those helicopters, but it was like an Uber network for helicopters. So they have a foothold of helipads, or vertiports is what they would be used for with Joby, and they have the demand. So they have basically a customer list that they can go to potentially have demand as you bring supply to the market. That's the way to think about that acquisition. They also have a partnership with Uber. That could be another source of demand, partnerships with companies like Delta. Lots of different ways that could play out, but operating those aircraft is likely where they would get the highest margin. What could the potential economics look like? Well, if you were able to charge $50 per seat, do 16 flights per day, for example, 365 days a year, that's about $1.2 million worth of revenue. I talked earlier about how they talked about aircraft being $1.3 million in cost. That's probably underestimating things. Let's say the cost is really $2 million, like I talked about earlier. You could potentially get a pretty high return on that initial investment if your operating costs are low, which they should be relatively low because, again, we don't really need a lot of fuel costs because you're charging these with electricity. So that's a way to think about the business model. And again, management has not given details about what their costs are going to be for each of these aircraft, what a flight is going to cost. They talked a couple of years ago about being $3 per mile, about the same cost as an Uber. I think that's really underestimating their pricing power. I think it could be significantly higher than that for the value that you're offering, potentially even something like $10 per mile, especially in cities like New York. That's where we're going to initially see that return on investment, but we don't know exactly what the economics look like, but hopefully that's helpful in understanding what their potential business model looks like. Now, they do have partnerships that are going to help with that sales and distribution. So let's say these places where the best use case for a Joby aircraft is going to be to and from the airport, they have partnerships with airlines. That's something that they're doing in the UAE, likely that the airport is going to be kind of a central hub there. And then you take your Joby aircraft from the airport to wherever your destination is. Maybe even then you have to get into a car. So you get into something like an Uber but they're really building out those distribution partnerships to hopefully build a solid business model and keep utilization of these aircraft high when they do get out into the field. Now, the other question is going to be, how many of these aircraft do you have at each location? If you're operating in New York, for example, is a handful of aircraft, let's say 3 or 4 aircraft, going to be enough to meet the demand? Or you're going to need a dozen aircraft, maybe even more than that. That will be really interesting to see if they are producing 500 aircraft per year, let's say by the end of the decade. That's where you could build out a pretty big air taxi network all around the world pretty quickly. So that's where there's a lot of opportunity for Joby Aviation. If each one of these aircraft is generating over $1 million worth of revenue, you could see that revenue scale and really compound really quickly if this is a big source of demand, something that customers really want. But I think the real value in Joby Aviation, the real differentiation from a company like Archer Aviation, is that they have built this to be an air taxi company. They have built the aircraft to be quiet. They have built the aircraft to have the redundancies that you need. They've built a scale in manufacture. This is definitely not a company without risk, but there is also a lot of opportunity. A couple things I want to go through in Fiscal AI is just looking at their costs. So let's look at their operating expenses. Right now, you're looking at operating expenses per year, about $675 million. That's what you're going to have to recoup or have enough cash to have runway for likely a couple of years. That's why I said the recent capital raise is going to be really important. Can the balance sheet handle that? Well, this is as of the end of September, almost $1 billion worth of cash on the balance sheet. But in October, the company sold 35 million shares of common stock, $16.85 per share. So actually higher than where they're trading today. Then raised about $591 million. So right now, as we stand, the company has about 2 years worth of runway. That may not get to the point where they can get to positive free cash flow, but they're getting a little bit closer. You should be able to at least scale out the business and start to get to full production. They're also starting to announce some sale deals, $250 million of aircraft and services sales in Kazakhstan. They're looking to deploy electric air taxi services in Saudi Arabia. They also did a recent demonstration in Japan. And let's not forget that Joby Aviation is also looking at autonomous flight. So eventually that pilot that you're going to see that's going to be in the aircraft, that pilot is likely going to come out. That probably gets you to the point where you're going to at least have 5 passengers, if not 6 passengers in the aircraft. So this is why investors are seeing a lot of potential in Joby Aviation. Again, very risky investment because we don't have revenue yet. We don't have free cash flow. We don't know what margins are going to be, but the potential for disruption from eVTOL aircraft, and especially the design that Joby Aviation is using, I think is too big to ignore. So that's why I own shares of Joby Aviation. But let me know if you have thoughts or questions about the stock in the comment section below. Don't forget to subscribe here at Asymmetric Investing and also my newsletter. Like I said, link on the screen and a link in the show notes. Love to have you as part of that community. Thanks for watching, everybody. See you next time.